Afternoon, everyone. Before we get started, I wanted to quickly set the stage so you have some context. Firstly, my name is Sean, and I'm a senior associate here at 500. My job is largely to work with a number of corporate innovators and investors on projects related to startup investment and startup partnerships. This event is being hosted as part of our ongoing Slack community, 500 VC. 500 VC is an invite-only Slack community for corporate and institutional investors to engage in helpful conversation, networking, and ultimately empower founders. We host networking events, startup presentations, and discussion series much like this one through the group. Within the Slack group, we started the Corporate Venture Capital channel to be a collaborative community through which members can share best practices and learnings, as well as help enhance the perception of CVC among the startup ecosystem. If you're at all interested in joining a community like this, please feel free to shoot me an email, which I'll drop in the chat shortly. This event is part of a bi-weekly speaker series featuring top corporate venturing practitioners sharing their unique journey to CVC, specific challenges, and best practices they have developed as a result. We will have Q&A on, so feel free to ask questions in the Q&A section, and we'll do our best to cover them. Now that you know who we are and what's going on, I'm going to hand it over to Nicolas to kick things off. Enjoy.
Thank you, Sean. And today is very special because normally I say thank you to 500 startups, but it's going to be a double thank you. We have Bedy who's going to be interviewed today from 500 startups, and she's been in 500 startups for a long time. Bedy, I look forward to this interview. Normally you're the one interviewing, so I feel like it's a chance to turn around the tables. And I really look forward to talking about corporate venturing with you. But if you could start a little with your story, how did you get into VC? How did you get into 500 startups and your personal story?
Absolutely. It's a pleasure to be with everyone today and sharing some of the learnings, especially now with 500 startups that we've done over 2,000 investments throughout the world. So that help us really like distill a lot of at least what's not working and what's working so that we can chat some information about that. So let me get started with my background. Hopefully you are seeing the background of my presentation.
Yes.
Yes? Great. So it's funny, Nicolas, you mentioned I joined a long time ago, right? It's all about sort of reference. I did join about 9 years ago, 500 startups. We started in 2010. And a lot of my journey was to figure out what to do at international level. So when we started investing and in venture, right, normally it's a very local business, or it used to be. Like a lot of the investors would invest, especially in early stage, where you can drive to or cycle to. It was almost unheard of investors going and flying across the world to try to find early stage talent with that. With 500, I found a really good fit. A lot of my background, although I look very Asian means 100% Asian looking, I am Brazilian. And I think that background being like Chinese Brazilian, living in the US, I have spent extensive time also in Europe, that allowed me to have this global vision to say, let's try to take the capital to different parts of the world. So with that in mind, a lot of people ask me about like, how do you get into venture, right? How do you get into the corporate venturing? Because if you are a consultant before, or if you are in other career path, that seems to be a very far-fetched journey. A little bit about my personal journey to how I stumbled upon the opportunity of investing is because I'm really, really passionate about building communities. That's my super strength. A lot of the time we talk about like, what's your superpower, whether it's your investment thesis or whether it's in you as an investor. For me, it's building communities, right? So I built this extensive community in Brazil with over 10,000 entrepreneurs, investors, corporates, university, and that created a really, really, really good pipeline of entrepreneurs that I wanted to invest. And by the time I was already like meeting some of the investors here in the Silicon Valley, most people kept on asking me, show me the best entrepreneurs, show me the best entrepreneurs. And I had a really good list of people. And many of the investors at that time felt like I had this really good fit. So when I joined 500, I had to offer for 500, but I also had to offer for other funds to help them source deals, right? And that's a very, very important factor when we're thinking about investing in the corporate venture side, is where do you really find the best talented entrepreneurs around the world. So I did many of the first deals, the international ones we had. So I had to figure out how to invest in Europe, which with the legal processing, normally it's not super easy, all the way to South Africa, to Brazil, to Mexico. So I think the first few deals were really hard to do. Like your first deal, a little bit of a funny story, like it cost us more to invest in our first Malaysia deal than the check size itself. I think the check size was $50,000. The bill of the legal was $75,000. But if we have done that now, the portfolio in Southeast Asia is over 200 companies there. That process of like doing things for the first time, it's gone, right? So the optimization, the learning how we do this at scale, at a global level, like now we definitely feel a lot more comfortable in investing globally. We have done investment in over 75 countries. And some of the portfolio companies that I work very closely together, the most successful one that I was working during the acceleration program that we have, because 500 startups, besides being a seed fund, we also have the acceleration program. It's this company called TalkDesk. The co-founders are from Portugal. And then because of the language similarity and all of those, we got sort of really close during the program. And then today, like recently, they announced a round that valued them over 3 billion. So that's like the most successful in terms of metrics. But the other companies that are listed here are the companies that announce exit. One is Brazilian, one is Peruvian, one is Italian. So the richness of the like tapestry of the talent we find is the part that I'm like most fascinated. Like at 500 every day, it's a new job almost, because we're constantly learning with the entrepreneurs. We believe innovation come from the edges when the entrepreneurs are building sort of tech solution. And the final component is I've been part of this really amazing network called Kaufman Fellowship Program that connects sort of global investors around the world. So a lot of my role, again, it's building pockets of networks and then make them interconnected so that innovation can happen, so that businesses can happen throughout. So a little bit of my journey to my background and how I became an investor, and a little bit of the throughout journey. The final part of it, the past 5 years, I've been really focusing on how to build a 500 platform, right? Like now that we have, at that time, like 1,000 investment, now we have 2,500 investment. How do we connect, for instance, the corporates into this platform? Because now we're seeing so much innovation. We can like distill the insights. We have the deal flow, we have the methodology. So how do we do a proper knowledge transfer, but also like build those networks for like constant learning? So we work really closely with the corporations. We work really closely with multilaterals. So we signed our first deal with the World Bank in Eastern Europe. That was like happened this year. We are looking at expansion to, for instance, Cambodia. So we're looking at a lot of like frontier markets, working with the governments. And then we also work very closely with investor networks so that we can build out and do a lot of knowledge sharing.
Thank you, Bedy, for this introduction. That was really cool. And I can say firsthand that you are really good at sharing insights and best practices, making sure the bar is raised. We will talk about VC Unlock towards the end of the interview, but there are so many places where I found 500 startups opening the playbook, even open sourcing it in a way. So let's talk a little about early investing, because this is what you're really good at. How much of early investing is art versus science?
Yeah. Let's start with the science because everyone wants to know how we do it, right? How much is pattern recognition and things like that. The science component of early stage, it's building the right portfolio size. Like I love to think that I'm like the best investor, but when I look at my pipeline, the companies that are really successful, the time I invest in them, of course, I believe every company is going to become a unicorn, but there's so many risk factors for them to fail, right? So the science component to it is, can I build a solid investment thesis to look at the market opportunities? And then in early stage, I don't have to be right in every deal, but I need to ensure that my portfolio is right size in a way that I can measure the success probability through it, right? So the way we look at it in the math component, we really believe in the power of law. So we believe that if we have a large enough portfolio that we're capturing really well, we will be able to find 1-2 companies out of 100 that's going to be a $3 billion company, right? Like if one company out of, we're investing a $1 million valuation, which was our valuation when we found these companies, and they exit at 3, that one single company creates a return for the entire portfolio. But I can be wrong the rest of the 90 portfolio, right? Of course, we have like 1% of the companies that are wildly successful, that means 50x, then another like 5%, that is like 20 to 30x. And then you have the long tail that like does not really anything except returning some capital and then a lot of sort of death rate, right? So I think the secret to the science is be able to create the thesis and be able to create the portfolio itself and then have discipline to practice to have the best deal flow. I think the art part, which I think comes into it, is like people often ask, like, what do you look for? What do you look for at the early stage? Is team, right? It's the talented people that come around us. If I have 10,000 deals to choose one, my quality is different from if I have 100, I have to choose one, right? So when we think about talent and metrics, there's definitely, after you've seen enough founders, there's a little bit of pattern recognition that you go through, and the metrics can easily be compared. So for instance, in emerging, like definitely Silicon Valley, we see where majority of deal flow comes from. I can compare what I'm seeing in Silicon Valley, then I can compare what's happening in Southeast Asia, followed by Latin America, followed by Middle East, because there's a little bit of catching up, a little bit of trend. So the fact that you have the floor for you to look at, your analysis is more precise, right? Because then we're trying to say, all right, of the 10,000 deals we see per year, how do I deploy the best 100? And the best 100, hopefully I can find one. So there's a little bit of science to the mechanics. And I think the it's an apprenticeship business, right? Like the practice definitely like makes you more confident what's working, what's not. One thing I recommend people do when you are doing investing side is when you're doing that investment, write down your assumptions, whether your assumptions is around this team, because there are so many reasons why you would want to do that deal. But at early stage, there are also many reasons why you wouldn't do that deal because everything is risky, right? But write it down, have conviction. In the few years, hindsight is always 2020. You can look back and then say, oh no, I was too arrogant about the market. I thought they would never be able to dominate the market, or that market, especially for corporate side, a lot of people say they can never break into the channel. Write it down, and it's okay to change that when you see there's enough pattern recognition for you to change that hypothesis that you put in. But it's very important for you to put that forward so that whatever it's intuition becomes sort of clear pattern recognition that you have.
I can't agree more. I think documenting why invest or not invest and going back in time afterwards is much more honest and believe that we will remember why we said yes or no. So absolutely. So Bedy, you've been 9 years in 500 startups. How has your investment thesis changed over time and what does it look like today?
Yeah. That's a great question, because when we started, I think a lot of people were very skeptical to have a large portfolio. I think what we've seen, and luckily our first fund it's doing quite well, is that the model, which is a little bit of the science component, works, right? So what is the model? The model is that we will invest in a like large quantity, because most of the funds invest in 20 companies, right? So we're looking at like a large portfolio size, and very often we double down when things are working, right? So I think that core part of the investment thesis is the same. What changes is how we structure the funds. So I think historically, when I just joined, the main fund would invest everything at a global level. And then in the second generation, we started looking at having even more like regional funds. I think the third generation, we think the hyper specialization also has its like benefit, right? Like if we're interested in certain industry, if we're interested in certain technology, like that narrowing and focus, it's ever more important. So the way that we're structuring it is to have even more specialized funds. So whether we're thinking about industry or a country, and then the plan is to build out that entire platform that we have, and now we have vehicles that are just capturing follow-ons, right? And now more and more, especially in venture, you would see that there are a lot of flexible structure into venture, right? Whether we're looking at special purpose vehicles, like in the late stage, a lot of people are talking about like SPAC. So I think the capital formation, when we started, it was like 10 years vehicle, not a lot of space for any other thing. And recently we've been seeing flexibility and innovation into the vehicles of funds, which has been really, really interesting, because the most valuable unit that never change for us is the entrepreneurs, right? It's the talent. That's the thing that doesn't have the variable. The thesis stay pretty similar, but the way we break the funds are changing, because it allows us to bring different partners into our funds, both as an investor, also at the general partner side, because then we can create even hyper specialization, mentors network, corporate network through it. So sort of quite excited for the direction to be more specialized, but at the same time plugged in into this broad network that allow us to build a little bit of a engine for innovation.
Very nice. And that will lead to my next questions. But before I forget, I think you're still presenting your slide. So if you can stop sharing, then people will see you better.
Yeah. Yeah, of course.
So my question is, if you could go back 7 years ago, so you were 2 years in 500 startups, what one advice you would give Bedy 7 years ago?
Okay. I am less smart than I am. So I'll give you context to that. I think when you know a lot about a market, that's when there's a little bit of risk associated with it, because you're so convinced that something won't happen. And that's the beauty of innovation. You don't know, you are creating that space for it, right? So I have past deals, because for instance, right, to get to like specific, I'm very, very familiar with the Brazilian market. The Brazilian banking system, there are 5 banks. I thought there was no way those 5 banks would open a space for future of banking, because everything is so controlled by the central bank, and nothing was going to change. Of course, fintech 10 years ago or 7 years ago is not the fintech of today, right? Like the policy are changing. The way that the people who are writing laws are changing and thinking how they think about innovation. So there is a market shift that I wasn't predicting. So at that time, I was like, like the founders that pitched me on that, I was like, there's no way, the market is never going to shift. And like when I look back, because our investment thesis, it's prompt for innovation, like it's okay if I'm wrong, but I think I kept my bar really high and I never wanted to be wrong. And I think that's what made the mistake. Because sometimes you feel like you have to be right in every single deal. No, you don't have to be. Well, you have to have conviction, but I think a lot of that created a barrier for me to be afraid to innovate. And I think that is a very fine balance to run. If your system is correct in that early stage, you have to allow yourself to push for the limit, right? And the more you know about the market, you run the risk to not be able to see the next transformational opportunity.
That makes sense. And in a way, you need to be right when everyone else is wrong. That's the ideal case. But here there is a conflict. You say you need to have conviction, which you had about Brazilian banks not changing. And at the same time, you would go back 7 years ago and tell Bedy, actually, some of your conviction, be soft about it or be flexible or assume you could be wrong about them.
Yeah, it is now for sure. So you asked me like how I would change it. Now, I think the conviction I need to have is around the team. Like you have a lot about the art of the early stage raising and investing. It's building trust. Mm-hmm. So you don't know anything about the founder. You don't know anything, but can they build the trust, right? So the conviction I need to have, it's really into the founding team. And the founding team pivot. That's the biggest lessons I've learned, right? Like they pivot if they're really good in execution, they might build like one of the company now is going to raise, and that's the beauty, I also think, of innovation, which is people talk a lot in Silicon Valley, like, oh, you should accept failure. But how do you incorporate that in practice, right? Like, are you ready to give another check to a founder that just failed? So like the founder was building something in the construction space. Now he's building something in the identity check space. Has nothing to do one thing with the other, but I really believe in the team. So I think the conviction in the early stage needs to be still around the team and their capacity to build the product, their capacity to distribute. And that doesn't change. The market, I think you're betting in the market and the market transition, right? So I think that's where I became a lot more open-minded about my conviction and understanding where the market is going, or is that just a feature, or is that just something like that's, I think, often the discussion that we end up going through. And yeah, it can be a feature, but if the founders know how to change that, they will find new like growth component to scale up their businesses.
Yeah. In a way, you want to find the team you believe could prove you wrong. If there was one team that could make it work, that would be that team. Yeah. No,
and I think that's the beauty of, I think that's the beauty of venture, and that's the beauty of innovation, right? And it's like, you don't want to put the constraints that you don't find it.
Yeah, that makes sense. Actually, I remember an interview you gave a while back about failure, and we should look at it as a budget. Do you mind telling? Because I thought that was a really good insight.
Yeah, I think it's similar when we think about portfolio, right? Like you have to think on the entire budget, not like, oh, I lost like 100,000, I have $1 million. You have to look at like spending now, because when you look at the return, it's in that entire component that needs to sort of come in. So it's a good way to, and that's also what I also often recommend CVC do. They say, I can invest from a balance sheet, right? And that's fine. But the problem with that is very often you don't have that set aside budget for that strategy, and you do one and then you're afraid. And that's when it's really risky, because the method is not applied, the focus is not there. And that's when you would lose, because it's not on the single deal, it's in that budgeting, is in that focus, is in that portfolio.
Very nice. So I want to spend maybe 5 minutes on the incubator side of 500 startups.
Yeah.
And this is even more meaningful, because the very early stage, this is where we can become more inclusive, improve diversity, especially for entrepreneurs who don't normally have the family and friends checks. Yeah. So how could you explain how the incubator setup you have is helping that?
Yeah, so I think the most important component on the intersection between the acceleration program and you be able to be more inclusive, and we have sort of data showing that I can talk soon about the data. There are two components. Sorry, there are three components in investing. First is your deal flow, like where does it come from? The second component is your investment decision. The third is helping companies grow, right? So those are the, let's say that those are the three phases. So the acceleration incubation program allows you potentially to influence the three of them. So first thing we do to think about that is what are the pockets of networks we want to recruit, right? If I'm Chinese Brazilian, I like very easily have my network into those markets, right? So it comes from the network that we're building, and can we proactively change that? So that's the first component. The second component that is very important is the investment team. So part of that investment team that we often try to do is, do we have different position to decide whether the deal makes sense, the deal doesn't make sense for it, right? So I think that's another component for that. And then the third one is the helping companies grow. The fact that we believe that you come in, we can influence your growth. It's okay if you're not that prepared at the moment you do the entry. So the acceleration program allow us to influence heavily in the deal flow and the afterwards. The second thing, in addition to this like 3 phases that I mentioned on investing that is applicable to all the people interested in investing, is if you do early stage, going back to the portfolio approach, it's okay if you are not right, as long as it's talent. So it allows you to take more risk to it, right? And I'll give you like a specific example. So when we're trying to bring an investment team member, very often the profile that a lot of people want is, I want like a founder with an exit. But if historically the founders with exit has been predominantly white male, you are creating this reinforcing component that you never change. So you have to change your system to look at, what if I bring someone with a different profile, right? What if I bring a person who's a very good networker, and they would bring a very different type of pipeline to what we're building? So you have to really change the method into your processes so that you can find more diversity to it. So internally, we've been measuring a lot on the metrics we have. I think the easiest one naturally is gender. And then we also look at, for instance, like Black founders, Latinx, and then also like LGBT sort of community to it. And then people not always like report or self-report to that, but for us, it's quite important to find that intersection between, can we change the system to improve the quality throughout, right? Can we influence that? And we believe we can. And then can we like be consistent in everything that we do to work on those numbers?
Yeah, it's influencing the pipeline.
Yeah, exactly. In all ends. And then we also believe that acceleration can help them increase significantly, right? So that allow us to be really broad and be able to include a lot of different type of founders that a lot of people wouldn't otherwise. And very, very, very clearly, that's not from like a ESG component, or like this is a diversity inclusion component. When we measure the successful companies, we have seen, and then that's more from gender than anything else, we have seen from like a gender perspective, about 40% of our unicorn companies are from women founders. That's way higher than our entire portfolio, right? Our entire portfolio is around 25%. So like, there's still a lot to catch up. It should be the same, right? Like whatever is at the exit should be at the entry, but still we're like fixing the system.
Very nice. And you mentioned about methods, but we talked about it before. It's also about having patience, being able to take time to be able to create these opportunities.
Yeah, early stage is 10 years business at least. And I know with sometimes with corporate venturing, we're thinking budget cycle year by year. So when we think about innovation, when we think about investing, and I think that's one of the biggest sort of lessons from early stage investing, is that it takes 10 years for us to see companies become wildly successful, right? That's our first fund. It took Twilio, Talkdesk, at least 7 years to build the business where they are in. And if you're looking at 1 year, it's okay, but then you should go to late stage. So don't go into that crisis mode where you're like, I definitely want to do early stage, but I want to see result in like 2 years, right? I think that's where you are not setting yourself for success, for expectation and the metrics that you're looking at.
So my comment earlier was more about improving diversity, inclusion, there are methods. But if I look at what you did for VC Unlock, for example, you took longer to make sure that it had diversity versus starting quickly. That's kind of where I was coming from.
Yeah, so that's so a little context. The VC Unlock is the investor training program we have been running at 500. The reason I got that program started is because when we were investing alone in emerging markets or outside of Silicon Valley, we were almost like the only investor. And I would see really dirty cap tables of like people owning 50% in early stage where they were adding like no value, right? And we need to clean cap tables. I was like, what if we standardize our documents or launch a key docs? What if we like share what has been working and it works on coming early stage, be a small investor, add value to it. So we start opening our learning like playbook on investing to the world, right? So the class, it's quite diverse today. We had, I think the last class just came in, the statistic, I think is like 37% of this class was on diverse background. The getting started on what your question, I don't know whether you need a lot of patience in that moment, but you need to be proactive on changing. So when we recruit the first class, because the program it's run, our pilot program, and it's actually our sort of most sought program, it's run in partnership with Stanford Center for Professional Development. The first class we had was clearly oversubscribed, still always like way more participants that want to participate. I had only one application when I was looking at that time that was, actually she was woman, LGBT, and Black at the same time. So she represented all of the three, but it was just one. And I told the team at that time, we will not launch a program if we didn't have certain diversity to it, right? I said, I cannot take a picture only with people like Nicolas. I need a beautiful picture with more colors and style and things like that. Like I cannot appear in a picture like that. Like I will not launch a program with it. So we were ready to hold and even change it if we didn't have that. And I think the way to think about one way, I think there's not one system to it, but one way to think about it is like a debt, right? So if you start, if your class has 50 people or like 100, I think it's the easier unit number, has 100 people, you have one, it's really hard to catch up to 49, really hard. But if you start with 30, you only have a debt of 20 to catch up. So we started at the beginning, like networks and giving a lot of scholarship out. Today we give 3 scholarship out, so 2 or 3, but still the class is extremely diverse because someone who has come to the program, they were wildly successful. Many of the team members, the participants that joined ended up like building funds and really successful. So very, very often, all you need is a reference. For us, like if I see in our organization, my CEO, like Christine, it's a she, right? Like I feel like I can take that job. But if my organization always has the same profile, it's really hard for me to be inspired that one day that's an option for me, right? So a lot of it, I also think breaking into venture, breaking into corporate venturing, I think it's creating sort of spaces and you would see results. And with the result, like you would see the next generation to come. But the being very proactive on the design of the system and that going back, and I know it feels a little bit of repeating to when I talk about early stage, it's the same thing, right? To a certain extent.
Yeah. I can only comment for VC Unlock 2019. I can tell you it was a beautiful, diverse picture of the class. No doubt.
Yeah, like you joined, so you can tell everyone how was their experience, right?
It was great. I seriously, I think it achieves the objectives, which is to raise the bar across the world. And I think that ultimately helps the entrepreneurs. Of course, you raise the bar for investors and limited partners. So there are limited partners going to this class, which is really good because then you get to understand a bit more of the full spectrum of venturing. But what I like is that it's going to help entrepreneurs around the world, especially those who are in smaller countries or smaller cities that don't normally have professional VCs, to get indeed terms that make sense. So to me, I think that's very meaningful, and indeed, it's a very good class we went to, and I talked to my two investment directors that went this year,
That's
and
true. That's true. Sorry.
and they loved it. So clearly, the program works year after year. Let me take a question from the audience. How do you see CVC, direct investments into startups, versus CVC becoming limited partners into institutional VCs, including 500?
Yeah. So I think one of the most important thing on the corporate venturing is, can you find the best deal flow? So regardless of what you're working, that's a question I would take back home and ask yourself, how can I find the best deal flow? When you invest in other funds, that will allow you to create a baseline, right? You're just starting in this business. So for instance, with 500, you would be able to see few hundred companies so that you understand what is great, right? What is coming, so that you can have more informed decision. You don't have to always invest in other funds for it, but it really helps, right? So a lot of the corporate that are investing in 500 is because they want to see the deal flow and they want to see the insights that will be really difficult for them to see if they wouldn't be in the funds. If your corporate strategy wants you to do direct investments, I think also it's quite important for you to define at which stage and would they need to have interaction with your business unit or not, right? So when you are setting that up, and we can talk a little bit sort of soon about it too, because we run this report with over 100 corporates, is to really ask, how financially are you driven, and then how strategically are you driven, right? If it's strategic, then is investing directly in the startup the best way to get that strategic outcome you have? And then if it's financial, are you there to win with this very, very competitive venture market, right? So very often investing in funds allow you to learn a lot faster from who has been doing that year over year.
Very good. And so clearly that's one reason to be a limited partner into funds. Do you see other good rationales to do that?
Yeah, I think there are sort of two components that I mentioned, right? Like one is the deal flow, another is the insights that you get from it. And then if you are building your own practice later, you can also learn depending on how each fund operates on sharing those information.
Okay, thank you. Another question about corporate venturing, which is really wide open. What would be the best practices, maybe 2 or 3, that you would give someone that is starting a corporate VC?
Yeah.
Beyond going to VC Unlock, of course.
I think the getting started on the CVC side, a lot of there are several paths to it, right? You can write from your balance sheet. You can set up a separate entity that your corporate is the sole LP, or you can build out a fund where your corporate entity is a main LP and then you raise outside money. So there are many, many, many ways to have your corporate venturing. I think the fastest way, of course, is if you don't have to set any structure and you do on your balance sheet to test it out. The only recommendation I have for you, if you decide to do so, you should regardless do your homework of what is the investment thesis, what is the objective on running this, right? And then the structure itself is a byproduct of it. But I recommend you go through how you're going to think about selecting those companies and building the flow for it.
Very nice. So something I want to ask about is about decision-making for investment in the team. But before that, I have a really good building up question from the audience. What is the most valuable background for an individual to have on a CVC team?
A good question. So you mentioned team, right? So I think it's being able to find a good composition between someone who understands really well the corporate needs and can navigate, especially if you have a strategic component to help navigate that. And I also recommend having someone who understand the venture itself. It's not a difficult business, but it requires practice. So in a team, maybe find that great combination between someone really experienced in the venture who has done like a general partners and funds. If they can come in either as a full-time general partner, if you're structuring as a fund, or as a consultant as part of your IC or structure, that can help the team to create that composition. The decision part, what the report's going to talk a little bit about that, and I've seen a lot of CVC struggle. So a lot of people think that if the CEO or the board is involved in this team, it's a good thing. The challenge to it is the decision timing, because it takes the same time for them to approve a $2 billion transaction and a $100,000 deal. So, no, sorry, it takes them more time to $100,000 deal because there are more uncertainties than their $2 billion acquisition, right? So on the composition of the team, just be a little bit careful on the focus. So if the CEO is focused on doing this, great. I would recommend, like sometimes you have like innovation team doing it, which is also really good, but just ensure people are focused. Like to win this, it's not an easy game. So you have to focus. And then if you build the right system with the investment thesis, sort of selection processes, and then inform the organization on what you're working, I think that's a little bit of the secret to success. And we did a little bit of survey as well on the profiles, because we had interview over 100 CVC profiles. We also interview a little bit of like their background. Sometimes they're business unit leaders. I think that's a very good profile to be sort of potentially transitioning, but it's important that they have the focus on. Sometimes the innovation team can be one, because the corporate VC, it's one of the innovation tools, right? You have to look at that as your strategy to it, right? So whether you're doing incubation, you're doing CVC, acquisition, so make sure that's well integrated to what you have.
No, this makes a lot of sense. And I agree, when you look at a CVC team, you need a mix of internal people who have been in the organization for a long time and external people, maybe back to your point, that don't come with the filters of the organization about what is going to work or not work. I'm not sure if the question was really about internal, external on the background question. Maybe the question was also about, are you looking at people who have done operations before, people who have done VC all the time, or?
Yeah, so maybe thinking just from because the corporate VC, you want to ensure like there's sort of that composition. If I just do a carve out for how do you become a general partner in a fund, normally there are two types of profile. One type of profile is an operator profile. So I'm an entrepreneur, I had an exit, I know exactly the pain points that entrepreneur is going to go through. So whether if we don't take a board seat, but if I'm taking a board seat, I would know the struggle, I would know the fundraising, I would know all the way to the exit on whatever it's needed. So it could be also an operator in a large sort of platform companies. Very often it's in the growth of that platform that it's very important. So you would see a lot of profiles that would come from like large platform companies. The founding team came from Google, YouTube. That's how they sort of joined. They really understood what was happening in the early stage in those platforms. And then they like founded the 500 startup. So the operators are one type. And that's why I say like a business unit leader would be a really good operator, because they would understand what entails to do business, if you invest in a startup, to do business internally with your procurement, with your all different areas. Another profile that I think is pretty popular, it's a little bit of my profile, which is like understand the network really well. Like I can bring in people, like it's a proprietary deal flow, right? Like the deal flow I have access to, no one else has access to. So there is a differentiation, right? Okay, maybe it's not in my board component, but if you ever need a connection to a co-investor, I know majority of the investor, like we're building this network of investors. So you needed a co-investor in Cambodia. Yes, I can find you a co-investor in Cambodia, in Kenya, in like different parts of the world. Do you need to hire someone? Yes, I can help you on building that network. Into that, you need to have an advisor. Yes, I know so many people who can help you with that. So like people who are really good connectors, also have an edge to it because they can find proprietary deal flow, and also because when someone needs something, they don't have to be the best, but their network is the best to help the entrepreneurs be successful. So I think this could be like two type of profiles between operators, and being able to capture that would be like some of the profiles. And of course there are variation to it, but those are important
Very
components.
nice. So if you think about early investment, like you said, it's extremely risky. And in your CVC report, actually, Sean shared the link, and I'm going to do what I never did. Look at the link below.
Or on the side. My chat is on the side, on the left side, depending on where your screen.
So early stage investment is even more risky, and some corporates think they are prepared to do that, and then maybe they don't realize how risky it is. Do you have any advice about corporate VCs that are just starting and they feel like they should invest very early stage? And I'm talking seed and not Series A is not early stage. I'm looking really earlier than that.
I heard one term, I thought it was really interesting. When you are in late stage or right after COVID, someone mentioned, no, one of the corporate venturing person mentioned like a concept. I thought it's like really interesting. It's like you don't want to be catching a falling knife. So, and that's part of the reason they thought, oh, like when something is really late stage, I'm uncomfortable with, what if they're only syndicating a deal because they can't find anywhere else? So we want to come into earlier stages, right? I think understanding your motivation in early stage, if it's for true innovation, you can build a portfolio, you can build a team. I mean, I would be my guest to like sort of join that, right? But I think the challenge for like getting started in early stage is because you really need to think through the portfolio and the risk component. And I wouldn't even give it a try to say, oh, let's do 5 companies and see. Like, I think that's where the most dangerous is at. It's better to say, I'll work with someone who's very specialized in that and they can flag me 5 companies than like trying to do it yourself, because it's so crowded. And if you're singing it, maybe there's a chance they haven't been able to find money anywhere else.
Yes, I remember an advice I received 2 years ago, which is there are only 2 types of startups: the one that need your money and the one that don't need your money. And you want to invest in the one that don't need your money. So if they need your money, there's sometimes a signal here.
Well, they've gone through everyone, right? They've gone through, like, what are the chances they're going to you if they have come through First 500 or YC before, right? So they're doing early stage. Are you catching what other people don't want? If you feel you can still win, that's fine, right? But like, I think if you're participating in this for financial reason, it needs to go in to win. If you have other reasons, like, oh, like we think we need to do this for whatever strategic, then just define whatever the strategy is.
Yeah, very true. I want to double click on the pandemic. Clearly, it's changing a lot about how people work in corporate venturing or even venturing. You don't build the deal flow the same way. You don't meet the people the same way. You don't look at it the same way. I want to ask if you see some positives in what the behaviors during these lockdown periods and so on is creating.
Yeah. Well, the positive is our deal flow has increased. So it's very selfish. It's interesting, right? Like all across the world, like I'll give an example on deal flow. So when we started in Mexico, because we think like, oh, it's Silicon Valley, of course, everyone wants to go there. When we started in Mexico, our deal flow for every class was around like 200-300 companies apply. The last batch with the pandemic, it was over 2,000 companies wanting to get funding.
Oh, wow.
In Mexico.
Wow.
So I think the positive side is that if you are positioned with the brands, I think a lot of people would come to you because you have momentum on the network effects, right? I think the question is maybe the negative side, or how do you get started? There are more and more networks that it's being built to try to, like, we are social human beings, right? I know from my team, everyone's struggling of like, I want to like spend meaningful time with other people. I want to share experience. So you definitely have that need, And right now, because you can't meet in person, it almost doesn't matter if we are like across the street from each other, or if we're sitting 12 hours away from each other. So I also think there's an opportunity really for us to expand new networks, because that will allow you to build out like parts that you were before only like in the habit of doing. So I think Sean mentioned at the beginning, this is sort of a series that got started because of this network we built for investors. We built this network on Slack called 500 VC. It's a byproduct. Like we didn't think like, oh, we'll build this like network of investors. It was because we were doing the virtual demo day, and the investors that joined the virtual demo day said, oh my God, this is so valuable. Can you keep the Slack community open? And then we're like, oh, sure, why not? And then since we're keeping it open, let's continue to build it out, right? So you would have networks like 500 VCs and many other networks that people are more welcoming. And they're only a byproduct or like a side effect from the pandemic, but you can like start the conversation, and in relationships, whatever you put in, you take out, right? So if you invest in the relationship, you invest in the consistency, I think like after when things resume, you're going to see a lot of results through it. And my recommendation, just take a step more like forward to try to build into new networks.
Yeah. In a way, the way I look at 500 startups and the way you've described it is you're building a mesh networks that keeps getting stronger and stronger. And I think the 2000 startups in Mexico is a beautiful example of that. This is really impressive. Were you surprised?
Yeah, we were. I think we knew the numbers were going to increase, and then that's the beauty, right? You can build that anywhere. Like, because we always have to think, oh, there's a Silicon Valley, there's a Silicon Valley. But it's like the consistency of work, the continuation of the work. One thing we really, really recommend people do when you are starting your CVC or your venture, or whichever it is, it's build a brand for yourself, but because it's a very crowded space, right? So how do you either build a brand or be close to people with the branding so that you see similar things, and then you start building your own voice added to it. So it's the overall, I think, just in terms of investing with the COVID, also you have a lot of technology that it's being built that it would otherwise not be here. So a little bit of the bright side, like I don't think there's a good side of the pandemic itself or to be celebrated, but technology definitely is one of the big solver for a lot of the problems we have around the world, right? So hopefully we'll be nurturing and investing in talents that can help build solutions throughout.
Very good. So we talked about the CVC report, but we haven't actually talked about what's inside the CVC report. Do you have like 1 or 2 minutes explanation about what it is and why people should actually read it?
Yeah. So the CVC reports have a few components. So we have done the survey with over 100 corporates. We wanted to map out some of the lessons learned. So there's a lot of the way that we designed it, there's a lot of like tricks between, for instance, like I talk about like the CEOs. Another very, very important trick that it's into the survey is that don't try to be in the middle between financial and strategic. Pick one side. Doesn't matter which side. If you pick the middle, you are like set for failure. Like, and that's not what we're saying. We heard from the hundreds of people that joined that. So there's a lot of tips and methods that we add into the CVC report. But the part that we really like, and it's super fun. So I've done like my MBTI personality test and everyone like do that. It's like, where are you? And everyone gets so excited, but there's no MBTI personality test for CVC. It's not one size fits all, right? You don't have to be a 500 startups. You don't have to be a TDK Ventures. Like depending on what you're looking for, there is like sort of different profiles that we lay out, and the way that we design the different type of personalities is really like for you to map out, for instance, 3 main factors, right? The first one is, are you strategic or financial? So you need to sort of find that spectrum. The second layer that we'll look at is how integrated you want to be with your corporate business versus independent. The third one that can be confusing with the second one is how entrepreneurial you want to be. versus sort of corporate, right? And the difference between the last two is how much you want to bring from outside versus you're building from inside, right? And that will give you all the different profiles. First, it's fun. I think we all like to know, what am I? Or what do I think I am?
Exactly. This is
what I
very
wish I
different.
would be. And then what I really am, like you have almost that thing like, what do you think this will be? And then what you really are. So you can really play that. So I think partially it allow you to, and I think that's really important. Like, if you know what you're looking for, the chance that you're going to win is much higher, right? It's much bigger. And the challenge of stepping into CVC is a lot of people say, oh, everyone else is doing, let's do it. And I think that's the perfect storm for like failure throughout.
Very nice. Yeah, I think there's a big difference between what you think you want to be, because it sounds good like the explorer or something, and what you actually are. So I remember we discussed about 500 startups at some point. It could become 500 funds. So one of the questions from the audience is, does 500 directly work with corporations? Yeah. And do you plan to do funds with them, for example?
Yeah, nicely placed. Yes, so we do actually, we have an entire corporate practice inside of 500, because like you mentioned, right, we're this mesh of network, and that's where we think innovation happens. It's not what Bedy understand what the future of trend is we rely from the ground up of information, and it's always ahead of us, right? So when we think about startup, the startup is building the trend in the future, and then we're only like reviewing. We're only looking at the hindsight 2020. So we have a corporate team. We work on many projects that are related to sourcing and POC, and then also we're getting a lot of interest from corporate venturing to use 500 as a service because of the deal flow, because of our experience as general partners. So they've been asking us to be part of their sort of consulting business as they're starting to set up. There's a big trend on a lot of corporates setting that up. And then sometimes they'll even come to us and say, I have 100 million, help me get it started. So we do work a lot with the corporates, both on the venturing side and also directly just on any of the innovation strategy that we have.
Very nice. So we're getting to the top of the hour. So I want to give a chance for you to give maybe a inspiring tip or advice for someone who is starting in corporate venturing. What would you tell that person to think about to be able to be successful in the space? Not just getting started, but the right advice to be successful.
I think the number one thing is don't be afraid to ask and be in the network. You're building something no one else built before. Like we are maybe second or third generation of corporate venturing, right? Like early days, there was one that it wasn't that successful, but it's a whole new generation, right? So you are at the forefront on like what the right corporate venture looks like. So be close to where the network, be close to where the VC world is, because we're really welcoming, like having more players, especially players that can then down the line do acquisition, work, be helpful to the companies. So I think the number one thing is like, don't be afraid to like expose. I think the vulnerability can be like a big thing of it. So I think it's first come over that, and some networks are more open than the others, but definitely whether it's the VC Unlocked network or the 500 VC that we build, which is just the investor community, it's like really welcoming anyone. And most importantly is build a platform for discussion. So when we have, for instance, this series where we're very lucky to have Nicolas helping us build consistently, is that we're building best practices, right? I don't know, like what worked in the past might not be in the future, right? So it's creating really this dialogue in conjunction, in partnership throughout. And we're going to see a lot of results in the years to come. I'm sure about that.
Thank you, Bedy. And I can say that everyone I know at 500 are super nice, super welcoming. So definitively anyone listening should not hesitate to reach out to 500. Bedy, thank you. It was great talking to you today.
No, likewise. It's a pleasure. And it's funny, I am in our own channel. But thank you for having you interviewing.
Thank you. Bye.
Bye-bye. Take care, everyone.